Hey everybody, Rachel Miklov here from Empire Tax Professionals. I'm the CEO of Empire Tax Professionals and I'm a licensed enrolled agent licensed by the IRS. And today I want to share the top tax deductions that you need to know as a business owner so you can reduce your liability legally and what you could do to pay less taxes. Essentially, when you have a lot of expenses, you reduce your taxes by the tax bracket that you're in, depending on what percentage you're in, either 15%, 20%, etc. And you want to make sure that you know what expenses are deductible, what can you deduct, because there's a lot of confusion in the online world and a lot of business owners don't know what they're able to deduct. Okay, so first expense is, let's just do this, top deductions. Okay, so number one is advertising, right? So how many of you spend a lot of money on marketing? You have a lot of money, you spend a lot of money on marketing, such as, Facebook ads, Google, virtual assistants overseas, and all of those marketing expenses are deductible. You also need to understand that the IRS says you are able to deduct what's ordinary and necessary for your business. So if it's ordinary and necessary for your business, then you can deduct it 100%. You want to know, there are specific expenses that you want to may take a look at. For example, if I wants to go to like a live, an event on in a Broadway show, that won't be deductible specifically for me because I'm an accountant and that's not really directly related to my business. But if a magician or if a somebody in the entertainment world wanted to go to do research and to research other Broadway shows, then yeah, that would be deductible because they are in that industry, they are in that field. So you want to make sure that your expenses are ordinary and necessary and they are normal in your industry. So again, advertising expenses, you're able to deduct, like I mentioned before, Facebook ads, Google AdWords, okay? Then virtual assistants you're able to deduct, and so much more. Anything related to marketing you're able to deduct. Now, you also want to make sure that these expenses are specific when you deduct it on the tax return. You don't want to have marketing of $100,000. You don't want to have a big lump sum. You want to have let's say 25K of Facebook ads or whatever the actual amount. You want to break it down as much as possible to reduce the risk of audit, okay? Expense number two is coaching. There are a lot of business owners that are hiring coaches. You're hiring, you're going to all these masterminds and events and conferences. All of those are 100% deductible. Okay, coaching, masterminds, events, conferences are all deductible. You want to keep a real detailed record showing where you went, why you went, prove. You need to have an agenda of where you're going and why are you going and how is that related to your business. If you're going to an accounting event and you're a digital marketer, the IRS may question you on that. I mean, I've never seen it, but they may, because you're not an accountant. They may ask you, why are you going to an accountant event? If you're going to a marketing event and you want to grow your business, then most likely the IRS will allow it because it is ordinary and necessary for your business, okay? Expense number 3, office supplies. Office supplies. So, and a lot of online business owners, they don't have office supplies, but you may have a little bit. You may buy a notebook, you may buy pens and other things like that. You may also have dues and subscriptions, which goes under software, ClickFunnels, Kajabi. All your online expenses may be deductible, or all your online software may be deductible under office supplies, depending on the amount, or dues and subscriptions, which is like online software and monthly recurring charges. Okay. Third is rent, or fourth actually, is rent. You're able to deduct your rent expense. If you're using your home office, you're able to deduct a portion at your home office. And again, if you're using your home office, you want to make sure that you have the proper square footage because the IRS will question you. What is the total square footage? What are you using the office space for? Do you have a closed space? Because it has to be closed space. A living room would not be, it won't be deductible because it's personal and business. You need to make sure that it's a secluded office location in your home that you're using 100% for business. But if you're using rent, let's say you have a Regis space or any online like Peer Space or any online space that you're going into and you're renting an office or WeWork, those are deductible under rent. Or even, if you have sometime in the very beginning, I had a lot of tax documents and so we had to put everything into storage. If you want to put a lot of your items in storage fees are also deductible. Keep that in mind, okay? So storage fees I'm going to add here. And I had a lot of things to store from exhibits. We did a lot of exhibits. So we put all these banners and the TV that we had and a lot of promotional material. All of that we were able to store and we were able to deduct it as a storage expense, okay? 6 would be, let's say, telephone and internet. That's obvious, right? Telephone and internet. Now make sure that this is not too high. It really depends, but it has to be very reasonable based on where you are. If you're paying, I don't know, $5,000 or $2,000 for internet expense, that may cause a red flag. Now it depends on where you're located, it depends on how many employees you have, etc. But it has to make sense. 7, I would say, is lease equipment. If you're leasing an equipment, we have we're paying $200 a month for a big copier that we have, so that would be deductible. Because we're leasing equipment. If you have other leasing equipment that you're purchasing, printers, phones, other things, you could deduct that as well. I went over coaching, consulting; those are also deductible. Just remember that, guys, you need to have enough income to prove the expense. So we had a client recently, 2 years ago, who prepared their own returns and they deducted coaching expenses but had no income. So you need to be very careful about that because the IRS in this specific situation, and again, every single situation is very different. In this specific situation, the IRS did not allow it because they had no income. You should have some income if you want to deduct these expenses because you need to prove to the IRS that you have a business purpose, okay? You want to make sure you have a business purpose, you have a solid business. That is why you're deducting these expenses. You can't just open a business where you have no degree or you have no solid business something. It has to be a solid business. Are you making money? Normally the IRS says that you're in business when you have a client. Did you collect payment? That's when you're really in business. And when you want to deduct these expenses, you should at least have some income so you can reduce your income based on the expenses that you have. So telephone and internet, rent, storage, telephone and internet, lease equipment, education. So books, materials. I read a lot and I always buy a ton of books. Audio books also are deductible. Like I mentioned, conferences. What else do we have here? Professional development. So if you're going to a Tony Robbins conference, and now again, it depends. It has to be ordinary and necessary to your business for you to deduct it. You can't just deduct expenses just like that. That's why it's always best to hire a professional so they can specifically guide you and let you know, should you deduct this expense or should you not? And it also depends on the amount. It depends on how much money you're making. It depends on so many things. We had a client who, let's say I don't remember the exact details because we have so many clients, thank God. But let's say a client who made $5,000 annually, and then all of a sudden he wants to deduct, $10,000 worth of travel expenses. You may have backup for the travel, but it has to be, you have to have a backup for it. The IRS may say, who did you travel to? Where did you go? Or let's say a real estate agent making no income and now he has all these travel expenses and all these telephone expenses. He could say that he called prospects and that could be a good reason. But if you made no income, the IRS may question and say, you made no income. Who did you call? Where did you go? You need to prove to them that you have a solid business. Okay, so website expenses. Any promotional material would be deductible as well, okay? Those would be promotional material. Bank service charges are deductible as well. You know, there are a lot of like, PayPal fees, bank service charges, And then if you're an Amazon seller, you have Amazon fees, which are deductible as well. If you have a coach, an Amazon coach, because there are like a lot of great coaches out there who coach other Amazon sellers so they can make 7 figures, multiple 6 figures. Amazon fees or any coaching fees are deductible as well. Oh, I forgot, legal and professional fees. So legal, professional fees, accounting fees. Okay, so accounting fees are deductible as well. Bookkeeping fees are deductible. Wages are deductible. Independent contractors are deductible. But again, you need to issue them a 1099. You need to collect the W-9 from them, but you need to issue them a 1099. If you enter a number on the independent contractor line and the IRS does not see a 1099, that may trigger an audit because the IRS may say, you have a 1099 for $20,000. Let me go see if there's any 1099s issued. And if it doesn't match the line under independent contractors, you have a risk of getting audited. That's why when you hire overseas accountants overseas virtual assistants, you may want to put that in a different line. You may want to put that under overseas independent contractors and under the other expenses, because if you put that on that line, the IRS may say, you paid independent contractors of $20,000, but I don't see a 1099. You may say, oh, they were remote. I hired them through either Upwork or I hired them through other, online sources. There's like PH online jobs, whatever. But again, you don't issue them 1099, so it should be in a separate line. And usually they won't ask you any additional information as long as you prove to them that you did pay somebody overseas. It just should have gone on a different line because that line is mainly for independent contractors in the U.S. and not overseas. So these are the general expenses. If you want a specific tax deduction checklist, comment below and we're going to send it over to you. And even better, let us know what business you're in. If you're in the marketing space, if you're in the Amazon space, I could actually send you a specific checklist related to your business. Remember that if you want to deduct expenses related to your business, it must be ordinary and it must be necessary for your business. The IRS says you can't take a taxi every single day to work, or you can't take an airplane if it's an hour away. It can't be, crazy. You could get the IRS also says you could get a car, but it has to be a reasonable car. You can't drive a Lamborghini to work every single day. The IRS may say that's excessive, or that's why there's so many specific rules that are related to the accounting industry, that are related to making sure that everything is properly deducted. And there are clues on the return to see, and the IRS knows, if something is over exaggerated, if you're not well, they don't care if you're not deducting something, but they want to make sure there are clues. For example, they may look at your rent. And if the address on the return, if your rent is like, let's say $20,000 a year and the address on the return is a home office, they may question it and say, how come you have a home office and you're deducting rent? So if they have clues, or like I mentioned with the 1099s or the 1099Ks, there's several clues that the IRS may see to confirm if your return is accurate or not. And that is why it is always best to hire an accountant to make sure that they know these clues. They know exactly what you can deduct, what you can't deduct, versus hiring somebody online or really remotely, like, overseas, that may not understand the bookkeeping tax laws, or even the red flags that the IRS may see for you not to get audited. Okay. Well, that's the biggest thing. Nobody wants to get audited. Everybody wants to pay the least amount of taxes, and that's the end goal. Those are the 2 goals of every single business owner. And I'm going to write this down. 2 goals, right, is pay less taxes. And then the second is reduce risks of audit, right? Because nobody wants to get audited. And normally, the main trigger of you getting audited, or any business owner that gets audited, is what's on the tax return. Also, another thing, don't ever put 0 or 5 at the end of the numbers. If the IRS sees a return, or even if I see a tax return that has 0 and 5, let's say office supplies 500, dues and subscriptions 800, telephone and internet 1,000, 1,500. I'll see 0 and 5. I know that these numbers are estimated. I know that these numbers are made up. And the IRS would think the same thing. So you need to make sure that every single line on the tax return is to the exact penny. None of it is estimated, which is why bookkeeping is such an important thing for every business owner to do. You can't estimate or you could estimate it to the nearest dollar, but it has to be done exact and accurate. And I'll tell you one thing, if the IRS ever audits your return, they're going to send you an IDR, right? An IDR, which is an information document request. They may ask for 4 things on your return. Let's say wages, rent, advertising, and office supplies. If those 4 things don't match to the exact number, and you don't have backup to the exact penny on those 4 items, and whichever items they choose, what happens is they're going to assume that everything on the return is not accurate, and they may go back 3 years, which is a statute of limitations, and may, say, okay, you don't have backup for this, you don't have backup for this, we're taking it off the return because you don't have backup for it. And now your income is going to go up, which makes you pay more taxes. So why go through that? I had a client who estimated his entire tax return. Why would you do that? He had to amend his return because it was inaccurate. Now, if you ever get audited, and the IRS may say, okay, show me this, show me these, and you don't have the proper backup, you're pretty much screwed. You are really screwed, and now they're going to go back 3 years, and you're going to end up owing so much. And if they see that it's fraud, they could go back 7 years if they want to. So you don't want to do that. You want to make sure that the bookkeeping is done properly. I recently had a real estate agent that was audited, and the IRS, again, she was a really nice lady actually, and the IRS agent questioned a few items on her return. They questioned like rent. It was like last year in the summer. They questioned a few items on the tax return. She had backup for some. She didn't have backup for the others. She ended up paying, a couple of $1,000s. You need to have backup, receipts, invoices, sales receipts, checks, proof of how it's related to your business. For example, even if you go to Staples, the IRS wants to see backup for that. Why? Because you could buy school supplies in Staples. You could buy toilet paper in Staples, and that is not deductible for your business, especially if you're buying toilet paper for your personal residence. But if I buy toilet paper for my business, that would be deductible. But if you buy toilet paper for your personal, or if the IRS sees specific expenses that are not deductible on Staples, and you're deducting that, then that's a problem. That's a problem. So you're reducing your taxes, and then it's really fraud. And you want to make sure that you're deducting everything that you can legally. You know exactly what is deductible. All the expenses are ordinary and necessary. Your tax return is submitted. It's accurate and complete, and it's complete. So you don't have to be scared. You don't need to be afraid for the IRS to audit you and say, oh my God, now they may go back 3 years. You don't want that. You want to make sure that your returns are accurate, complete, and submitted properly on time, and you're paying the proper taxes every single year. So when or if you ever get that IRS notice, you're not going to be afraid. You have backup for everything. You can have the peace of mind and focus on growing your business. Okay? Let me know if you have any questions. Thank you so much, and I appreciate you watching me. Thank you. Bye-bye.